Hey, good morning. It's Jeff Waite here at stockideas.org, and I just want to share a little bit about Bollinger Band strategy, and particularly how it relates to swing trading. So I've just have a chart here of Citigroup, which we're going to use as an example. So just to give you some context, Citigroup is a company that I'm bullish on in 2014 and the sort of longer term. I think it could go up to $65 or $70. So I have a bullish bias on this stock, which is important context. And with that in mind, I use Bollinger Bands to help me indicate when I should be buying or selling the stock, or when it's a good time to trade the stock. So if you're not familiar with Bollinger Bands, they're these blue bands above and below the price, and they basically give you an idea as how oversold or overbought the stock is. So when a stock is at the lower end of its Bollinger Band, it's typically relatively oversold. When it moves up to the top of the Bollinger Band, it's relatively overbought. So as a general rule, if I'm bullish on a stock over the long term, but I want to swing trade it in the interim, then I'll use Bollinger Bands to help guide me. So I'll look for when the stock comes down to support here, for example, right? There's some previous price support and it's at its lower Bollinger Band. That's indicative to me that it might be worth buying a quarter position or a third of a position, because the stock in the short term is oversold and will probably revert back to the mean. Then conversely, when the stock moves up and pierces through its upper Bollinger Band, I may be inclined to sell the stock, at least part of it, a third or a half or a quarter position, and take some profits, and then wait till it retraces to the 20-period moving average, which is the middle Bollinger Band, or even come back all the way down to the end. Obviously, it's not a perfect science here, but you kind of get the idea, I hope, of how if you're buying as a swing trader with a bullish bias, if you're buying at the lower Bollinger Band and selling at the upper Bollinger Band, there's some opportunity to compound some of your gains there. And again, it's not an exact science. You can see that sometimes stocks become oversold and stay oversold, and it isn't perfect. It's something that should probably be used in combination with other indicators, but definitely does help add a level of depth to your analysis. The other thing that's worth mentioning is Bollinger Bands also measure relative volatility. So here you can see that the Bollinger Bands are pinching in, they're sloping together. The bottom band is sloping up, and you can see then that that kind of indicates prices are getting less volatile, and then from periods of these compression come periods of expansion. So one thing to keep in mind is after the Bollinger Bands have been pinching for a while and the stock explodes upwards or downwards, you can bet that that move is going to be dynamic, and it might stay oversold or overbought for a while as volatility goes from a period of compression to a period of expansion. Now I'm talking about using Bollinger Bands to swing trade from a bullish or long perspective, but you could, if you were bearish on Citigroup, you could also short the stock as it approached the upper Bollinger Band and cover as it approached the lower Bollinger Band. One more thing I just want to point out, another stock I've been looking at is IAMGOLD. This is a good example of Bollinger Bands that have been pinching. So Bollinger Bands, this stock has been consolidating after a steep downtrend, you can see here, and the Bollinger Bands really pinched in here, and now today it looks like the stock, or yesterday the stock has started to move, explode higher, and this might be another example where the Bollinger Bands are so pinched that the stock may actually continue to move to $4 or $4.25 or $4.15, but it may ride the upper Bollinger Band here as it's coming out of a period of extreme contraction. So those are sort of the two main things to keep in mind with Bollinger Bands, is that they measure relative overbought and oversold conditions, and then they also sort of indicate how volatility is changing within that stock. If you're looking for more information on Bollinger Band strategy, I encourage you to click on the blog post below. There's a link just below this video, and that'll take you to a blog post where there's more information on how to use Bollinger Bands, how to use the middle Bollinger Band, and how to just incorporate Bollinger Bands as an aspect of your swing trading strategy. Again, you don't want to use these in a vacuum. They should be just another filter, another level of depth to add to your analysis. But hopefully this has given you a quick idea of how you can use Bollinger analysis on any stock idea to get a little bit more insight into how oversold or overbought that particular stock is. I hope this has been helpful. If you're curious for more information, please subscribe to my channel and visit stockideas.org for more analysis and ideas. Thanks very much for visiting.